Hi everyone, if you're thinking about buying your first home, congratulations, it's an exciting milestone. But I know it can feel a bit overwhelming if you don't know where to start. Don't worry, I've got you covered. In this video, I'll break down everything you need to know, from deposits, mortgages, and government schemes to things you should look out for and avoid. By the end, you'll feel confident and ready to start your home buying journey. Let's get into it. Right, let's get down to brass tacks. The first thing you need to do is work out your budget. Most mortgage lenders will offer you around 4 to 4.5 times your annual income. For example, if you earn £30,000 a year, you could potentially borrow between £120,000 and £135,000. But this isn't set in stone. Lenders also look at your debt-to-income ratio, credit score, and their own policies. If you've got a lot of outstanding debts, lenders might be more cautious. It's always best to chat with a mortgage advisor for a more accurate idea. Don't be afraid to shop around and compare different lenders for the best deal. Now, let's talk about the deposit. It's one of the most crucial steps in buying a home and can significantly impact your mortgage options and overall financial health. In the UK, you typically need at least a 5% deposit for a home. This means if you're eyeing a property, you need to start saving early. For a £200,000 house, that's £10,000. But remember, this is just the minimum. A larger deposit can open more doors for you. The bigger your deposit, the better the mortgage deals you'll unlock. Lenders see you as less risky, which can lead to more favourable terms. If you can stretch to a 10% or even a 20% deposit, you'll benefit from lower interest rates and potentially lower monthly repayments. This can save you thousands over the life of your mortgage. Start early, even if it's just putting away a small amount each month. Consistency is key, and over time these small amounts will add up. Check out government schemes, like the Lifetime ISA, where the government gives you a 25% bonus on your savings each year, up to £1,000. This can significantly boost your savings. It's like free money, and who doesn't love free money? Take advantage of these schemes to maximize your savings potential. Saving for a deposit takes time and dedication. It's important to have a clear plan and stick to it, even when it feels challenging. It's not a sprint, it's a marathon. Stay focused, stay disciplined, and you'll reach your goal. Let's be honest, credit scores can be a bit of a mystery. But trust me, when it comes to getting a mortgage, your credit score is like your financial report card. Before you apply for a mortgage, check your credit score through platforms like Experian, Equifax, or ClearScore. If your score isn't where you want it to be, there are ways to boost it. Make sure you're registered on the electoral roll and always pay your bills on time. A good credit score means more competitive mortgage deals, which could save you thousands in the long run, so it's definitely worth taking the time to get it shipshape. Chapter 4, Understanding Mortgage Options. Right, let's talk mortgages. Whether you're a first-time buyer or looking to remortgage, understanding your options is crucial. First up, we've got fixed-rate mortgages. These are popular because they offer stability and predictability. With a fixed-rate mortgage, your interest rate is set for a certain period, usually 2, 5, or 10 years. This means you can plan your finances without worrying about fluctuating interest rates. This means your monthly payments stay the same even if interest rates go up. It's a great option for those who prefer a consistent payment schedule. Then we've got tracker mortgages. These are a bit different and can be more flexible. They track the Bank of England's base rate, which means your interest rate and your monthly payments can go up or down. This can be beneficial if rates drop, but risky if they rise. And of course, there are other options like discount rate mortgages, capped rate mortgages, and mortgages for first-time buyers. Each has its own set of benefits and potential drawbacks. My top tip is to talk to a mortgage broker. They have the expertise to guide you through the maze of mortgage options. They can help you find the best deal, explain all the jargon, and even negotiate with lenders on your behalf. This can save you a lot of time and stress. Plus, they can tell you about hidden costs like arrangement fees and valuation fees. These can add up, so it's important to be aware of them. Trust me, a good mortgage broker is worth their weight in gold. They can make the entire process smoother and more manageable, ensuring you get the best possible deal. Chapter 5, Research Government Schemes. The UK government offers some nifty schemes to help you get on the property ladder. One popular scheme is the Help to Buy Equity Loan. This scheme allows you to buy a new build property with just a 5% deposit. The government lends you up to 20% of the property value, or 40% in London, interest-free for the first 5 years. Then we have shared ownership, which allows you to buy a share of a property and pay rent on the remaining share. It's a great way to get on the property ladder if you can't afford to buy outright. Make sure you read the small print and understand the long-term implications. Chapter 6. Don't forget additional costs. There are a few other expenses you need to factor in. First up, we have stamp duty land tax, or SDLT. First-time buyers currently pay no stamp duty on homes up to £425,000. Then there are solicitor fees, which can vary but are around £1,000 to £1,500. And let's not forget about the survey costs. Basic surveys start at around £400, while full structural surveys can cost upwards of £1,000. Finally, we have the moving costs, which can set you back anywhere from £500 to over £1,000. Make sure you factor in all these additional costs before you start handing over any money. It's always better to be safe than sorry. Now this is the fun part, choosing the right property. But remember, buying a house is a big decision. First things first. Location, location, location. Think about your lifestyle and what's important to you. Once you've found a few areas that tick your boxes, it's time to start looking at properties. When you're viewing properties, keep your eyes peeled for any red flags. Check for signs of damp, cracks in the walls or ceilings, and drafts. Consider energy efficiency, as properties with better EPC ratings will cost you less to heat. Visit multiple properties, compare them, and don't rush into a purchase. Remember, this is a big decision. So, you've found a property you love, done your research, and you're ready to make an offer. But hold your horses. Before you get too carried away, get a mortgage agreement in principle, or AIP. An AIP is a pre-approval from a lender that shows sellers you're a serious buyer. Getting an AIP is usually straightforward. You can apply for one online, over the phone, or through a mortgage broker. The lender will carry out a soft credit check and ask about your income, outgoings, and debts. An AIP is usually only valid for a few months, so make sure it's still valid before you start putting offers in. Getting an AIP is a quick and easy way to show sellers that you're a serious buyer. So you've found the one, the perfect property that ticks all your boxes and makes your heart race with excitement, the property that makes your heart sing. It's a thrilling moment, but now comes the crucial next step. Now it's time to make an offer. This is where the real journey begins. Do your homework on similar properties in the area and see what they have sold for recently. This research will give you a solid foundation for your offer. Don't be afraid to start with an offer below the asking price, especially in a buyer's market. Negotiation is key, and you might be surprised at what you can achieve. Once your offer has been accepted, congratulations, you've crossed a significant milestone. But before you get too carried away, there's one more crucial hurdle, the survey. This step is essential to ensure your dream home doesn't turn into a nightmare. A survey is like getting a health check for your new home. It provides a detailed report on the property's condition. It will uncover any hidden nasties that could end up costing you a fortune in the long run. Issues like structural damage, mold, or a leaky roof can be very expensive to fix. For a first-time buyer, I'd recommend getting a full structural survey. This comprehensive check will give you peace of mind. If the survey reveals any major problems, you can renegotiate the price with the seller or even pull out of the purchase. Remember, knowledge is power. Being informed helps you make the best decision for your future. Right then, you've found your dream home. Your offer has been accepted, the survey is all done, and your mortgage is approved. It's time for the final hurdle, exchanging contracts and completing the purchase. Exchanging contracts is when you and the seller legally agree to the sale. You'll both sign copies of the contract and your solicitor will swap them over, making it official. Once contracts have been exchanged, you'll need to pay your deposit. Completion usually happens a week or two after exchange of contracts. This is when the remaining balance of the purchase price is transferred to the seller's solicitor, and the property officially becomes yours. Moving day is always a bit chaotic, but try to enjoy the experience. You've worked hard to get to this point, so savor the moment. Buying your first home is a huge milestone, and with the right preparation, it can be a smooth and exciting process. From understanding your budget and securing a mortgage to finding the perfect property and navigating the legal side of things, there's a lot to think about. But trust me, the feeling of finally getting those keys in your hand makes it all worthwhile. If you found this video helpful, don't forget to like, subscribe, and share it with anyone looking to buy their first home. Thanks for watching and happy house hunting.